Hey, good evening, everyone. Good evening.
Good evening.
Hello,
Yeah,
everybody.
hi. Hi, how are you? I'm glad that you found your way to the Collaborate session. I just realized some in today discussion board is missing today. I'm gonna have to fix it. I'm gonna fix it now. Somehow there was, I don't know why that. Um, let's see. My Okay, I gotta change the volume. Um, so I see. First of all, let me take you to today's discussion board, which today's forum, which you wouldn't find because it's not. It wasn't made. It wasn't. So I'm gonna have to create one right now. Where is? How do I? Okay, so I'm gonna have to do. Uh, okay. Uh, okay, it should be good there. And then it should be, where is it now? Okay. That would be at the end. Oh God. So I'm gonna have to move it to, hmm.
Your thing is not even connected.
Did someone say something to me? Just give me a second. I'm, this thing is, so I believe everybody got the email, right? Everyone got the email. That's why you are here, but there may be some people that still isn't aware. Where is this thing? Find. Okay, it is there. Why is it there? Why are there two? Okay, you guys are there, and so this must be. This was just made recently. Okay, now it's in the correct place. All right. So now there is today's forum. Please, sign into today's forum. Okay. I see. I see 8 people there. If you are here in the collaborate session, but if you haven't signed into the discussion board, please do it now. Yeah, hello. Who is this? Yeah, hello. Kendar Kumar. So, someone's in this building. I don't know if you can hear that noise, but somebody's, somebody has issue with the pipes, making a lot of noise, which is, driving me crazy. Again, let's see. There are 14 people, so I should see also 14 here. Let's see. I see 12, so 2 more people still need to sign into today's forum, right? All right, sorry about that. All right, so one benefit, I mean, until last semester we did it all online, and then if you do it online, then every session is recorded, and you can watch, later the live recording, the recording of the live session, right? But anyway, we're gonna have to. Okay. So if I remember correctly, last Wednesday, where's the folder? So we did exercise of the we did Excel practice of income statement. So let's see if I have. Of course, that file was not here. All right, I'll just download it, or is it the? So you can go to. It's this file, right? It's this file. Let me see if that's the. I need you to download it, and just like that, we financial statements example. What exactly? Oh yeah, yeah,
Hi,
yeah.
Professor.
Yeah. Hi. How are you?
I'm sorry. This is Elizabeth. I'm fine. How are you? I just wanted to let you know that me and some other students are in school because we did not get an
Oh,
email. We're here trying to log on. I was able to log in, but there's like a good 8 students here still. I don't know if they all logged in, but what's her name?
but if
Awadua
they're
is can't log in, so she's just gonna listen off of my phone if that's okay. But she's here.
well, if you are you in the hallway? Are you in the lobby of? Are you in the hallway of 8th floor?
Yeah, I'm next. I'm in Fetterman. Yeah, me
Why
and some
don't
other
you?
students.
Yeah, yeah. But listen. Um, on the 7th floor, that F707 is usually unlocked and open, and no class is using it at this time. So that we were able to use F707 previously. So can anyone check if F707 is available? And if it is open and available, why don't you go in there and use the computers there?
Okay, so I'm going to check. Thank you.
Yeah. Because if you're just using a phone, and if there are 8 people, watching the one phone, watching just one phone, it's going to be very difficult. And everybody can use, if that room F707 is not available, um, uh,
It's
you, you should be able to connect through your own mobile device. Yeah, go ahead, Elizabeth. Are you saying something? Are you saying something? No. All right. So where was I? Uh, so please, what did I do? Okay, please download this file, right? Download this file. You need to, and I'm downloading it too. On open. Okay. Uh, so remember in the last class, okay, and I have, this may look too small, but we did it last time. And if you remember, uh, it's not a difficult thing, right? And just to jostle your memory, and for uh, people that were not there last time, right? Let's check this out, right? Because the so the income statement exercise we did last time, but let's do it again, just to make. So gross revenue was this 2 million something, and there were returns and allowances, and returns and allowances are already entered as negative. So basically, normally if this is not entered as negative, you would need to subtract it. But here, you don't need to subtract it because this is already entered as negative. So all you need to do is just, sum, right? Use auto sum, right? And it's going to sum. And then that's going to be your net revenue, right? And gross profit is already filled in, but I'm going to do it later. And then let's find GAS, and GAS is basically, beginning inventory plus net purchase. Right? Beginning inventory plus net purchase minus returns and allowances. But the returns and allowances already in negative numbers. So by summing up everything, right, you find GAS already. Okay. And also last time we talked about this a lot. Although chronologically CGS must come first, but because CGS has to be the conclusion of this section, CGS must be the conclusion of this section. The ending inventory and total, the CGS are flipped. Okay, so to find CGS, right, you will need to subtract ending inventory from GAS, right? There you go. And gross profit, once again, you should be very careful about gross profit. Why? Because it's not really profit just yet. It's not. It's just it's not even rough measurement. This could be a good representation, a rough approximation of true profit only if operating expenses are minimal. If operating expenses are minimal, then yeah, you can use this as uh, uh, an approximation of profit. But if otherwise, you cannot. But so normally I wouldn't use gross profit. I wouldn't even bother to, because I would just go to the operating expenses. Of course, then operating expenses are, of course, again, sum of all of that, and then subtract some of these two items, right? Some of these two line items from net revenue. Okay. And one more thing, something that you may have noticed here, you could have probably noticed, uh, in investment income is not listed here, because if it is zero, right? If the consider that it is zero, and then there is no reason for investment income to be there. I mean, if they don't have an investment income, they have an option not to show it, right? And then, so again, this is optional, but if you want, so in other words, I'm going to, normally I will subtract some of this and this from net revenue, right? And arrive directly to operating income, or EBIT, right? You all know another name for operating income is EBIT. Okay. And then from operating income, then I will subtract interest payment. And then, once again, I will insert, normally, after subtracting interest payment, I will get to taxable income, or EBT. Before taxes, right? But in this example, they didn't do that. They just went, instead of listing the taxable income as a separate line item, they just added, they just subtracted, interest payment from operating income, right? Just like this, subtracted S25 from S23, right? And then multiplied, that this is what? S23 minus S25 is exactly the taxable income, right? So here, let me give it like, okay. Just add, insert one row there, so make, so I think I better do this. I'm gonna delete those cells and subtract, interest from this, right? This minus this. That's the taxable income. And what happened here? Operating income is negative. Was it already negative like that? Oh, because I didn't do the gross profit. Okay, normally what I would do, as I said, from net revenue, right, I will subtract the sum of these two line items, CGS and OPEX. Okay. All right, then EBIT, earnings before interest and taxes, operating income, and from that I will subtract interest payment, right? Interest, subtract interest, we arrive at this taxable income, right? Okay, which is, and then apply tax rate of 40% there. Tax rate of 40%, right? So S23 minus S24 is already here. So I don't need to, previously, I didn't have this line item. I didn't have this. So I used, S23 minus S24, which is taxable income, right? And then multiplied it by the tax rate. But then again, here, once I have this taxable income, S23 minus S24 as a separate line item, then I don't, I don't have to, do it redundantly. I can just point to S26, right? And then I get a tax amount calculated, right? And then finally, net profit is also called EAT, right? Everyone remembers that. Net profit or net income is also called another name, EAT, right? Earnings after taxes. Literally, because it's literally the earnings after paying taxes. So then there you go. What you need to do is from the EBT, taxable income, subtract taxes, right? Then you arrive at this. Okay, so everyone is okay with that? Everyone has that file in front of you? I hear I hear no one. Huh? Everyone has.
Yes, I do.
Good, good. And yeah, great. So if you are in campus, Elizabeth, I think, Elizabeth, are you there, Elizabeth? I thought you went to check if
Yes, Professor, I'm
F707,
here.
yeah, hi. So is F707 available?
No, Professor, the door is locked.
Oh, door's locked. I'm sorry. So I hope
Yes,
everyone, hmm?
this is me. I'm on by phone because at the campus, it won't collaborate. It's not loading.
Yeah.
So I'm doing via phone. So I don't have the file in front of me.
I see. Uh, yeah, and is there anyone among you? How many people are there with you? How many people?
It was like
So
around six
there's
people.
1, 2,
Uh, okay, does anyone have
like
any
6 of us.
Does anyone have any laptop or tablet? Does anyone have any laptop or tablet?
Yeah, I have MacBook.
I have my tablet. She has a laptop, but
Yeah,
it's
yeah,
not able
yeah.
to connect into both. To either, it's not
Well,
connecting to the internet at all, and it's like
oh,
our personal hotspot is too weak. So we're still
oh.
trying to
Well,
log
BMCC.
on to our laptop.
Yeah, yeah. There is a they have Wi-Fi at BMCC. Every
Yeah,
BMCC
BMCC
campus there's
unsecured
Wi-Fi.
and BMCC secured. It's not working on the laptop. She's been trying since we got here.
Oh,
I don't
oh.
know what's wrong today, but it seems like things are just not working. So we
There's
all basically on our
unsecured.
phones.
Uh, there is unsecured and secured. I mean, even with unsecured, it will still require your, login, BMCC login ID and password. It's just like your um, email email ID and password. Um, although it says unsecured, it should be secure because it's so if anyone can connect through a laptop um, or a tablet, you can open the you can open the this Excel file and uh, just for today. Um, and hopefully, bear with me. Uh, yes, this is the. But if you cannot see anything, remember, uh, after the class, by it will take some time, but before the end of the day, uh, it will take just about 30 minutes after the class, 30 minutes to 1 hour. I will post the recording of the live session, so you'll be able to see it then. So please check it out later. Um, so back here, so of course, if you are at home, you would be you would have no problem. Um, so here, what uh, I did it, I used degree of some degree of liberty, right? I used some degree of liberty to uh, modify the format a little. Let me also. Okay, that's not gonna. Um, what I did was basically I added this row, right? Investment income first. And again, it doesn't matter here because in this example, the investment income was zero. Uh, there was not even, anything for investment income. So it doesn't matter. But by having this column, by having this row, it makes it more complete. And then at the end, after the CGS, the original example had gross profit. I didn't do gross profit because, um, as I said, gross profit is uh, gross profit is not the best uh, approximation of true profit. So I didn't use it, but left it there. And instead, I went directly to operating income or EBIT by subtracting directly the sum of CGS and operating expenses directly from the net revenue, right? And then from operating income or EBIT, right? Then I paid interest. So this was subtracted from that 90,000 was subtracted from the EBIT. So that is taxable income. The result is the taxable income, or EBT, earnings before taxes. That's S23 minus S24, right? And from that, tax was, 40%. Tax rate is 40% of the taxable income. So tax was calculated that way. And then by subtracting taxes from taxable income, or EBT, you arrive at net profit, or EAT. Okay. They also call it net profit or net income. And this is something I don't like about, uh, this is something I don't like about accounting terminology, because they use the term profit and income interchangeably. Um, if it is, we are talking about the balance sheet and income statement of a business. So in that case, uh, it's more appropriate to call it net profit. But if it is a personal case, not business income statement, but personal. But of course, as a person, you don't keep income statement. I mean, there's nothing that says you cannot keep the income statement. You cannot record income statement. But people generally don't do that. But if you keep your individual, if you record your individual income statement, then how would you call this? You wouldn't call that profit, because um, you're not selling. I mean, this is not profit. I mean, think about it. As a person, as an individual, right? Your income is basically, your revenue is your labor income, isn't it right? Your revenue is your labor income, right? Um, of course, you can have some investment income, but most of your revenue is earned income or labor income, right? So that's called income, and that's not called revenue, right? Because even though you sold your labor, I mean, your labor income is the payment for your revenue for selling your labor, right? Be it, physical labor or mental labor, your revenue, your paycheck, your income, your salary, that's the revenue for selling your labor, right? So you can follow the same logic, and then you have variable cost. You have fixed cost. For example, your variable cost is something like uh, your variable cost is, like commute. I mean, if you commute every day, if you commute every day, uh, 7 days, 5 days a week, uh, then it will have to be part of your fixed expenses, right? Or fixed cost. But if you're self-employed, and um, if you travel, depending on your work, because you're self-employed, you're a freelancer, and as a freelancer, you may travel to work or not. If you have a job, if you have a work to do, you will travel. So basically, in that case, the travel expenses, that's your variable cost. And the more you travel, that means the more work you have, right? And so your income depends on how many, engagements you have, right? So in that case, it will be, your travel expense will be your variable cost. But And then your fixed cost is, of course, your, rent, telecommunications. I mean, you have a, plan. You pay, fixed amount, regardless of how many phone calls you make or how many data you use. You pay fixed, so it's fixed cost, which is, your, operating expenses. Um, and then you pay interest, you pay taxes, and finally you arrive at this. But then what do you call that? As an individual, you don't call that profit. That's your net income. So if you use the term net income, it is more inclusive. I mean, it can be also inclusive of personal case, right? Personal income. But once again, uh, generally, individuals don't record, don't keep this type of income statement. This is typically for business. So that's why I'm saying calling it net income is weird. It's inappropriate. Calling it net profit is appropriate, or EAT, right? All right. So again, uh, if I use gross profit, right, then gross profit is, in that case, gross profit is, first net revenue minus the CGS, okay? And then from that, to arrive at operating income, uh, I can subtract, I did it here, basically I subtracted some of, from the net revenue, I subtracted CGS and OPEX. But if when I have gross profit, then because CGS has been already subtracted, I can subtract only OPEX and arrive at the same result, right? So that's, the difference between uh, uh, whether you use gross profit or not. Okay, and then now let's go to the balance sheet. Okay, and you would in this example I put the balance sheet vertically. I mean, normally I would cut it off here. In other words, um, I would cut off once I get the total asset uh, and total liabilities and equity. I will put it side to side, right? Side by side. But here I didn't do it. I just put them vertically. That way, it will sort of like the length or the height would be like comparable to so that I would have like two tables side by side, that looks nice. Balance sheet and income statement, next to each other. But first of all, let's start with the balance sheet, right? We all understand there is something missing here. But just like investment income, if the line items don't exist, you don't need. But let's put it there anyway to make it more complete. I'm gonna put it there to make it more complete. So there's cash and cash equivalent. Okay, I'm not gonna spell out everything. And then marketable securities. Which means stocks and bonds, right? Stocks and bonds. And then promissory notes. Of course, this means accounts receivable. So AR. would rather just use, abbreviations like that. Accounts receivable. There's inventory. Okay, so that's current assets, total current assets. And then the rest of them are non-current assets. So non-current assets, as you know, it's plant and equipment, land and building. So other assets or miscellaneous. They call it other assets or miscellaneous. Miscellaneous. Alrighty. So maybe putting that thick bottom border, it's better here than here. Oh no. Better not. Why is it? Okay. So now let's think about it. First, these line items, this in this particular example, marketable securities and promissory notes, nothing is recorded, so we'll assume they are zero. We have accounts receivable, which are invoices, as I said, and there is inventory of this much. I mean, if these two companies are, if these two are, the balance sheet and income statement came from the same company, right? Uh, you see why it is, right? So it's like I think it should be like this. They should be related, right? They should be related. And if this number and if this is the same company, right? Income statement and balance sheet of the same company, and these two numbers are not matching, then that's weird. That's really something, right? Something's not right. Now, so these are, these line items are current assets. So the total, we know what to do. We can use, auto sum, and it's going to sum everything, and that's going to be our total current assets. Now something, okay, this one I'm going to have to, okay. Now, And let's go, it's easy. The total non-current assets, of course, you will need to simply use auto sum, and it's going to sum everything. And then here's something called miscellaneous assets, or other assets, or miscellaneous assets. I'm going to talk about it a little later, but here, something's not, I'm going to do it, talk about it later. So you might think, oh, so total assets must be sum of these two, right? Total assets are supposed to be the current assets, total current assets, plus total non-current assets. So sum of these two, right? You think, well, that must be it. No, don't. Theoretically, true, but then be careful. If we, and that's why I wrote it there. That's why I did in the column P, which is next to, I put some of the current assets and non-current assets there, which comes to 8.05 million, right? Just leave it there for now. And I'll tell you why. First, so now let's go into current liabilities. Let's go to, in current liabilities, accounts payable, right? So I would write accounts, too much abbreviation, accounts payable. Now, accounts payable are, of course, invoices that we have to pay. This accounts receivable are the invoices that we issued, right? Invoices that we sent out. So it's something for us to collect. And these promissory notes, if there are any, that's also our claim. But these are the invoices that are due on us, right? In other words, our vendors sent us those, invoices. Notes payable, these are the promissory notes that we issued. So they will come due, right? They will come due anytime soon, within 1 year, So that's what we owe. So the total current liabilities, and if there is anything to be added, one more. Anything to be added? Accruals. Let's say, but in this example, 0, accruals are 0, right? So total current liabilities, again, using auto sum. There you go. And then total non-current liabilities. Of course, mortgage, bonds payable, using auto sum, right? That's it. And the total liabilities are basically sum of these two. And then our equity is here. It's given as 3.8 million. So then our total liabilities plus equity, total liabilities and equity, it should be this, right? That's our total liabilities and equity. But I put it here, not here. Why? Because just like the miscellaneous or other miscellaneous liabilities. There should be miscellaneous liabilities. Why? Look, you see there is a big difference, discrepancy here, right? There's a big discrepancy. Total assets must be equal to total liabilities and equity. But look, they are different, right? They are different. And of course, if they are different, then this is a problem. They must balance out. Balance sheet must balance out, right? Balance sheet must balance out. Otherwise, it's not balance sheet. It must be balanced out. Sometimes this discrepancy can be very minor. In this case, we cannot say it is minor. The difference is like $30,000. I mean, think about it. This is the original, this is the capital raised. In other words, part of this you borrowed, right? 4.28 million is what you borrowed, and 3.8 million is the owner's equity, right? It came from the owners. So not a single dime should be unaccounted for. Not a single dime can be unaccounted for. But then if there is this much, and if the discrepancy is very minor, less than, it's hard to put a exact number on it. Like you cannot say 0.1% is acceptable, because if 0.1% is acceptable, what about 0.01%? 0.01%, this company's capital raised was like 8.08 million, roughly, let's say 8 million, right? 80,000 is 1% of it. 80,000 is 1%. 8,000 will be 0.1%. So 800 would be 0.01%. 0.01%, 800, you may, consider that to be acceptable minor discrepancy. Minor discrepancy, why? Eventually it should be accounted for, but usually, this can happen. Discrepancy can happen because data is not complete. There was some missing data, or statistical discrepancy, statistical error, or some data are not available yet. So it's based on the past data, or all of these things can cause small minor discrepancy, but it shouldn't be significant. What is the significant level? Is this 0.0 is 0.001% significant level? I mean, if it is more than 0.01% significant, less than 0.01% relatively insignificant. Now, as I said, in this example, 800 is like 0.001%, right? 800. So is 0.001% discrepancy acceptable? No, once again, it depends also how big the total asset size is. If the company's total asset size is 1 trillion, think about it, 1 trillion. 1% of 1 trillion is 10 billion already, 10 billion, right? So then 0.1% is 1 billion. 0.01% will be 100 million. 0.0, right? 0.001% is, still 0.0001% would still be like 10 million or 1 million. You cannot define what is significant or insignificant by percentage, because the total asset size matters, right? So you will need to use discretion to tell what is insignificant level. In this case, I would say if it is like less than $800, I can consider that as miscellaneous asset. In other words, this line item, miscellaneous asset or miscellaneous liabilities, are an ad hoc line item for an ad hoc occasion. In other words, when there is some incomplete data, this kind of discrepancy can result. So for that kind of occasion, and if this discrepancy is really, really minor, then we can simply label it miscellaneous assets or miscellaneous liabilities. And in this case, this thing doesn't need to, because liabilities on equity side is greater, no adjustment needs to be made here. The adjustment needs to be made here. In other words, total assets is not catching up with the total liabilities and equity, right? So then something is missing here. So we need to fill this out. We know, and again, if this is not a minor discrepancy, you will really have to dig. You need to dig into it. You really need to dig into data, dig into everything, original, source of data, to reconcile this discrepancy, to reconcile this difference. But if it is relatively minor, and as I said, in this example, if it is less than like $800, that can, by discretion, that can be considered minor. Then you only need to fill that difference here. You put like the difference. In this case, it's 30,000, which is not clearly not insignificant. But we'll just consider that, just for our example, we'll just consider that to be a minor discrepancy. Okay, so if it is minor discrepancy, and I don't want, we want to automate it. We want to automate this process instead of you visually checking it and manually entering, I will put, the difference between the two. I mean, you can do that, but that is totally, that defeats the purpose of using Excel. If you use Excel, we want to make this process automated. So then how do I do that? There is something called conditional statement, if, right? And if you use if, right, first, open parenthesis, you make comparison between, so here, P, that's in the, what must go in there is you're comparing what's in P, that should be what, P16. And if P16 is less than P32, put comma, then you must fill in the difference there, right? That's what is needed to be done, right? That's what needs to be done, right? So then what must come in there is the difference between P32 and P16. Otherwise, the next comma, so think about it, there are two commas. The first comma means, right? The first comma means if this is the case, then do this, do this. And then second comma is otherwise. That means otherwise, nothing to do. Nothing to do, right? You can leave it blank if there's nothing to do, or put 0 because no adjustment needs to be made, right? It's a very simple statement, but it does, it comes in very handy, and it's really, really, versatile, and it can be used under, it can be more, it can be applied to a more escalated or elevated, situations. In other words, it can handle more complex conditions, because it's basically a loop mechanism, or loop algorithm, right? And there can be multiple loops before arriving at conclusion. In other words, if X meets the condition, right? If A meets the condition X, then do this. Otherwise, do run the loop again. So if A meets the condition X, then do this, and everything is solved. Otherwise, compare that again. Does A meet, then if it doesn't meet condition X, then does it meet condition Y? If it does, then it will stop. Otherwise, it will run the same if again. Does it meet, then does A meet condition W? Right? And you can keep going, as many, in other words, that circular algorithm, that loop algorithm can be run any number of times, right? This is, and again, to apply this, of course, when if it is only, very minor, right? The discrepancy is very minor. But of course, you can put this formula there. You can put that command there, and after that, you can compare whether it is a significant difference or insignificant difference. If it is significant, you'll have to really dig into the data to find, to identify the cause of this discrepancy. If it is just a minor discrepancy, then you leave it as is, and you apply the same. We don't know which one. We don't know which one will be, which one should be. We don't know which one should kick in. So we build the same formula into both. We build the same formula command into both cells. So in this case, if P32, because sometimes this can be smaller, right? Usually, if P32 is less than P16, then there is something to do. You will need to take the difference, right? You subtract, P32 from P16. 32, right? If that's the case, right? If P32 is less than this, you'll take the difference between the two, and that should be filled in here. Otherwise, just leave it as 0. Right? And then if you do that, hit enter, Yeah, it will automatically. So in other words, it will automatically pick 0 and it's gonna, so nothing's gonna happen there. So the logic here in O15 and O31, the logic in there are like complementary logic. It's called like conjugate logic, right? Conjugate means, you know, when one is positive, the other one is negative, right? So yeah, here what goes in is, you know, what you need to compare is if P16 is less than P32, and if that's the case, there's something to do. Otherwise, nothing. And also here, then it's the conjugate or complementary logic here. What you need to compare is if P32 is less than P16, then there's something you need to do, right? P16 minus P32. Otherwise, just leave it as blank, right? So then finally, total assets. When it comes to total assets, then it's going to be the sum of current assets, non-current assets, and miscellaneous. Okay. And now it's balanced, right? And here, total liabilities and equity is then total liabilities, sum of total liabilities and equity, and then miscellaneous liabilities. Okay. And of course, there's no change. It's going to be 8.08 million. And then column P, this don't need to be, this is for your own reference, right? That's for you to work out this. So when you actually report it, you will put it into a PowerPoint or you will put it into a Word file, and you don't need to show this column, right? You can just, so I collapse this column, right? And then you don't need to show that. So that way we have completed the balance sheet. Okay. Any questions so far? Any questions? Was everyone able to follow this and replicate this?
Yes.
Okay, good, Candace. At least I heard one positive response. How about other people? Anybody else?
Yes, Professor.
All right. Okay, great, Jimena. Great. Let's see. There were
Yes.
two.
Yes, Professor.
Okay, good. All righty. Okay, that was. All right, good. So, any other questions? Any other questions? Any other? All right. If there are no questions, if there are no more questions, then I will call it a day, and we'll see you on Wednesday. Hopefully by then I will. I'm almost losing my voice now. Hopefully by then, by Wednesday I will be okay, and hopefully we'll see you in class, in person. Okay. All right. So have a good night, everyone, and see you on Wednesday. Okay. All right. I will stop sharing.
Thank you,
And
Professor.
Good night, Professor.
all right. All right. Have a good night. Take care,
Thank you,
everyone.
Professor. Good night.
All right. You're welcome. You're welcome. So I will.
Good night.
Good night. Good night. I will stop sharing. And please don't forget to sign into today's forum, okay? That's the only physical proof of your attendance. Okay, so I'll stop recording and sign out.